understand what stock is at the basics, right? And that's why it is the 101, right? And like I've previously said in one of the recording, right, in the previous webinar, the 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 webinars now would be more of like a series, right? They would continue going forward for every topic, for most of the important topics, right? The key topics, and for most of the important asset classes that we're discussing, right? So for stock investing, is going to be a continuation, right, from where we stopped, right? So I believe that every person that have actually listened, right, or learn about the stock investing 101 already have some level of information or knowledge about what stock is, right? And if you do have that knowledge about what stock is, then I believe that at that point you should uh you should be able to like connect with what we're discussing this evening. But if you don't have that, right, that means you missed the previous conversation and you are not able to you're not able to rewatch the recording. So what you can do is to go back maybe after this and watch the recording again. Because trust me, one of the things you can do for yourself when it comes to personal finance and investing and managing your money, right? The best things you can do for yourself is having like best knowledge, very good foundation on how to manage your money. Because trust me, things are changing. The economic landscape is changing every day, right? And you have to know that the economic principle that guides accumulating wealth, they still remain the same, right? It's just that we have to learn it, right? And we have to understand how it works and how you can apply it to this current economic situation. So once you get that, once you understand the core principle, right, it makes it easy for you to apply it going forward, right?
Oh, how was
Uh, where's that noise coming from?
okay.
Yeah, yeah.
Um,
All right. So what I'm going to do is for those guys that might have missed the previous recording, right? What I'm going to do is I'm just going to drop the previous webinar on stock investing 101. So I'm just going to go ahead and drop the link to that, the direct link to get that for free for us. Then we'll get started. Okay, great. So for today, we're discussing how to buy stocks, right? So if you already understand, if you already know what stock is, that means to some extent you have some level of interest. If you're here, that means you have some level of interest in stock, right? And you want to leverage it to build wealth, right? And you want to leverage it to accumulate more wealth. So one thing you have to know is as much as you might have like learn online, learn probably in the previous webinar, right? There's still something you need to know when it comes to buying stock. It's not always straightforward like that. Yeah, it's pretty simple, but it's not straightforward. Just like everything is simple, right? Everything in this world is simple, but when you look at it, when you understand it at the core, maybe there's a little bit of insider tips that can help you do it better. And that's what we want to explore. So we'll go right into it now. Okay, all right, we'll go right into it now. So what we'll discuss today, like I've said, is how to buy stocks, basically. And like I said on community group, right, that's going to cover how to buy stocks, right? The types of stocks you can, the type of order you can use, right? We discuss how to place order for stock, basically, the types of order you can use, right? And three things you shouldn't do when you're investing in stock, right? And five things you should do before you invest in stocks, right? So those are the things we'll consider, right? This is just pardon this module right this screen is just an I just extracted it from the entire slide of the stock investing masterclass, right? So we're going to cover everything here, plus what I said on the group. So let's get started into it. So there's really no need for us to define stock again, right? Because I believe everybody know that, right? So when you want to get to buying stocks, there's something you need to understand. The first thing is you need to know that when you're buying stock, the only place you can get stock is in the stock market. I believe we all know that, right? And if you're getting stocks from the stock market, you obviously know that you can't access it directly as an individual, right? That is where you need the help of a broker, right? And what does a broker do, right? What do they do? Primarily, what they do is they provide you access into the stock market. And by access, I mean they enable you to buy, right? Sell in the stock market. They enable you to buy and sell any stock of your choice in the stock market. And that's what they do basically for you. From for centuries there have been different types of broker, and there have been different way they operate, right? From the days where when you buy stocks, it's basically a delivery of paper to your doorstep, right? When you place order for, let's say, 10 shares of General Electric now, at that point they basically deliver 10 sheet of paper to you that shows that it's stocks of let's say General Electric or General Motors or something, right? So that's what they've been doing basically. They just provide you access into the market. But beyond knowing that these guys are the one that provide you access into the market, what are the other things that you should know about them, right? The other things you should know about them is when you're picking a broker, right? It's not just straightforward when you picking a broker, right? I've said it already that what they do primarily, like it's written on the screen, is they serve as intermediary between you and the market. So see it as if you live in Lagos, right? Let's say you live in Lagos Island and you want to get something at a market in Lagos mainland, right? So what you want to do is maybe maybe you want to use a rider, right? So let's say you want to use a rider to get what you need in the market. So in this case, we can say the rider would go and we give the rider the order, right? What you need tomatoes, you need fresh apples, you need stuff like that. The rider will go to the market, price it on your behalf, buy it on your behalf, and bring it home. In this case, we can call the rider brokers, stock brokers, right? We can call them brokers, right? While the market itself is the stock market, and you are still you, right? So that's what they do. But when it comes to picking brokers, just like a rider, one thing you want to consider is you want to consider the price, right? The price at which different riders will fulfill an order for you. So let's say a rider is charging you 1,000 naira to go do it, right? Another rider is charging you 15,000 to go do it, or another rider is charging you 10% of whatever you buy. So if you buy something of 100 naira, if you buy something of 1,000, the person is saying you pay me 100 naira. So that those are the things that you consider when you are picking a rider for that tax, right? The same thing when it comes to buying stocks. It's not just straightforward because there are different policies with different brokers, and the way they operate is different. So you want to look at the one that fits perfectly for you. You already know what they do. Now, when you want to pick a broker, there are a list of things you need to consider before you pick a broker. So we'll go over them, right? So the first thing is when you want to pick a broker, when you're considering a broker now, you want to check for the market access, right? Because you're picking a broker primarily for stock investing. So let's say you're picking a broker you're the kind of investor, right, that is interested in foreign markets. You want to buy into Apple, Facebook, let's say Amazon, right? Tesla. If you want to pick a broker, the first thing you consider when you're picking a broker is you want to ensure that the broker that you are picking is a broker that have access into the market where these foreign companies are traded, where these foreign companies are available, right? So you buy a broker that only have access into, let's say, Nigerian stock markets, right? It does not serve you. It's just like you selected a rider that does not go to mainland, only deal with market in the island, and you want to buy something at mainland, like it does not work for you, right? So that's the first thing you need to consider, right? And yeah, it's possible there are different brokers in the market that you can work with, and they have access to different markets. Most of them have access to the major market, but sometimes some of them might not have access to some market. So let's say, for example, now let's take a practical example. Recently this year, Bamboo started uh, giving people access to the Nigerian stock market, right? Before they were only doing foreign market straight. International markets, you could do different international markets, right? But they were not doing Nigerian stocks. So that means if you're the kind of person that is interested in Nigerian stocks, you would not pick Bamboo as a broker, right? And now that brokers are not like completely digital, right? You don't have to go to their office to buy stock. You don't have to go to the office to place order. They don't have to come to your house to deliver your stock to you, right? It's completely like virtual now. You can do it on your phone, right? Do it online. So what you need to consider is their access. Another thing, let me give you another example for the access now. So there was a time I was making a research, right? There's this company in Nigeria that most people, like most students in big city, eat from, right? There's chicken, what's the name? Yeah, there's Domino Pizza, right? There's Domino Pizza, right? There's Domino Pizza, there's this Cold Stone, right? That people like eat a lot, especially in big cities where we have malls, right? So I was making research into them, right? I was like, if people like pay a lot of money to do this thing every to eat their stuff every time, maybe it's worth owning, right? Maybe we should just consider their financials and own them. So when I was doing the research, I discovered that the company was actually owned by another parent company. And from the thread of research, I discovered that for me to actually buy into the Cold Stone and Domino Pizza, right? For me to actually own shares from them, I have to own shares of a Canadian company, which is not listed on the Nasdaq, right? It's only listed on the Canadian Stock Exchange. So I discovered that the broker I was using then does not have access to the Canadian market, right? So when I search the company's name, the parent company's name on their platform, it doesn't show up at all. So let's say I'm the kind of person that really, really want to buy into that company. Obviously, at that point, I would start to consider a new broker. Not that I would leave those guys necessarily, but I might have to, for that purpose, I might have to consider another broker that have access into the foreign market, right, into that Canadian market, right? So that's one thing we need to consider when you're picking a stockbroker. Then the next thing you need to consider when you're picking a broker is you want to consider commission fee, right? Just like I said, if you're sending a rider a message, they will charge you a particular fee, right? So you want to it's just like the normal basic math, right? You want to pay for the lowest amount possible. Can we get me clearly? I don't know if is my network.
Yes, I can hear you clearly.
All right, great. All right, great. Okay, so like I was saying, when you're picking a broker, you want to consider the broker that charges like the minimum fee, right? You don't want somebody that charges you maybe 10% of whatever you're investing. So that means if you're investing $100, you're paying $10 to the broker. That's like super high, right? You want to sample them, check different brokers that are in the market that have access to the market that you want. Then you check the commission that they charge. Yeah, everybody charge commission, right? Because they have to pay for their infrastructure, all their activities of providing you access into the stock market. They have to pay for it, hence the commission. So, but once you want to do is you want to ensure that you are not paying so much in the commission that it looks like you're actually like paying a broker instead of investing the way you're supposed to invest. So that's one thing you want to consider. Then the next thing you want to consider is product feature and ease of navigation, right? So this is more like this is more like a non-functional requirement, right? By sorry for using that word. What it means is it's more like something that you actually don't need for it. You do actually don't need the function, right? It's not like an addition to whatever you're doing investing in stock. It's not like a primary function that you need. The primary things that you need are market access and commission, right? Then the product feature and ease of navigation is not like a primary thing you need. It's more like a secondary thing. That's why I said it's not a functional requirement, right? So for product feature and ease of navigation, it simply means that you want to go for a broker because now we are investing on our app, right? On our phone, on our laptop, right? We want to go for a broker that has a very good interface, right? I mean, beyond just giving you access to the market, they must have an interface that makes it easy for you to like buy stocks, not an interface that looks like you are fighting war or you yourself cannot even understand what you're doing, right? Not an interface that lead you to make a mistake when you're placing order or something, right? You want to make it easy for yourself. You want to make it's just like saying you are using a social media app. You want to go for a social media app that have very good interface. Imagine your WhatsApp, instead of scrolling up, you have to scroll down or you have to do one weird thing before you actually access your chat or send message. The same thing, right? You want to go for a broker that have like very cool app, right? I mean, it's not that I said it's not really like a functional requirement, but it's something that you should consider as well. And then the ease of navigation. Then when it comes to product feature, you want to consider a broker that gives you more than just access to the market because quite all right. Everybody gives access to the market. Every broker in the industry give access to the market. That's their primary business, right? But beyond the primary business, you want to find somebody that is innovating around that. I mean, if everybody is giving access to the market, what's the broker they are picking, what are they doing different, right? What they are doing different might just be something as simple as education like this. They might just be holding maybe a weekly webinars to inform you more as an investor, right? Or they might just be like they provide a very good customer service, right? Or customer support, like for the one, not that I don't know of, not that I know of others, right? But the one I know of very well is Chaka, right? So Chaka is one of like the good brokers in the market that they have very good customer support in the sense that if you sign up on Chaka now, there's a dedicated Telegram channel for all their users. If you join the Telegram channel, if you have any questions, any issue as a user, you get to message the admin, which is like part of the company, and they get to resolve it for you. So you have questions, and this is more like they have a channel dedicated for users. I feel like that's nice beyond just giving you access to the market. Then the next thing is there are different things you get to like learn. By the time you start downloading different brokers and you start checking their apps, you feel like I like these people app more than these people app. Then you start seeing reason. For some guys, they allow you to do paper trading. Like instead of you putting your money, you want to invest in stock, right? Instead of you putting your money into stock to see how it will perform, what if you could create a paper stock, right? What's the word? What if you could do a demo? A demo is like you're not putting your money into it, but you're creating a portfolio that is more like a paper portfolio, not a real portfolio, right? That you can do exactly what you wanted to do with your money. Now you can now observe. So let's say I want to invest 100,000 now, but I'm not sure that I know what I'm doing. So what if I test the same theory that I have with just a paper, right? Like a paper money. Some brokers have that kind of feature on their platforms. So I feel like that's innovation around the entire thing they are providing, right? Then the next thing you want to do is you want to check for security and reliability because you're putting your funds here, you're putting your hard-earned money here. You want to ensure that the platform is secure and is reliable. In terms of security, you want to ensure that they don't have history of people like breaking into their platform, moving users' fund, right? They don't have issues um n- of let's say sanctions or anything, right? Then you want to check if they are licensed, right? Right. Licensing means the Security Exchange Commission has approved them as like a reliable entity to carry out that particular business, right? And the CBN has approved them, those kind of stuff, right? Then in terms of reliability, they're like good on the barest minimum. And it's not like they are the kind of broker where their app is always done every 24 hours. I mean, they're always having issue every week or something. So you want to check for things like that, right? So most people don't get to talk about when talking about buying stocks, right? Is they just feel like it just goes straight forward. Those are the things you should check for. So when you know this, it makes it easy for you to like decide for yourself how you want to go forward. Like always say, the goal of all my webinars and talks is to ensure that you can do it by yourself, right? So if you end, I think I lost internet on my PC. Can we hear me from this end?
Yes, I can.
Yes, we can hear you. Can hear you.
Oh, all right, all right. Okay, sorry, I lost internet to the other device.
But I'm not
Okay, okay, I think it's back now. Okay, all right. So the other thing I was saying is I think I just wrapped up how you can what you should check out for when you're picking broker. Thing that comes after is you verifying your account. So whichever broker you pick, you'll be required to verify your account, right? You'll be required to verify your account, and it's part of like the normal KYC and the legal compliance. So you just verify your account, submit your document online, just like the way when you open your bank account at the bank, right? You'd verify it, the same thing. So once you're done with that, you'll be able to have access into oh, okay. It's as easy as the buying and selling is as easy as buying airtime or something, right? It's just like you placing order, but to make it easy, I'll just show us a few things around it, right? So before I go to that directly, I'll show us something, right? I'll tell us something. We've always been saying that you can invest in stock with as low as $1. What makes that possible? What the actual thing that makes that possible is a concept called fractional shares, right? Fractional shares is simply you buying less than less than one unit of a share. So let me explain it this way. So you have like we said, when you have a company can be divided into let's say 1 million shares, right? So imagine you pick one of those 1 million shares, right? And you divide into smaller units and you can buy out of that small unit. That's what the concept of fractional share is. Because when you look at it, frankly, companies like Amazon, they are worth hundreds of dollars, right? So that means you can't buy them with $1. So if you have $1, you can invest in companies like Amazon or Tesla, right? But one thing you can do is you can buy, you can, let's say a share of Amazon is selling for, hypothetically, let's say selling for $100 now. You can buy $1 share of Amazon. So it looks like 0.00, the way we have one BTC, and you can have 0.000 BTC, right? The same thing, it applies to shares. You can, that's what is called fractional shares. And that's the main reason why you can buy into stock with as low as $1. So let me show us something now. That's like the main thing we're discussing. I'll be using Chaka because they're like the primary broker I use. So I'll be using them to demo, right? Okay, great. Still loading. Network check it, right? Okay. Stock ticker is more like a symbol or abbreviation of a company, right? So when you look at the market, when you look at stock market, on the stock market, you have things like this, right? I don't know if yeah, we can see this. So on the stock market, you have something. Can you hear me from this end? Can you hear me from this end?
We can hear you. We can hear you now. I think the network is
All
like
right,
dropping off
all
and
right,
off.
good. All right, good. So I was talking about something. I was talking about stockbroker, right? Stock ticker, right? So the concept of stock ticker is actually very simple. It's just something that I feel like we should know. Apologies. So when you're dealing with stocks on the stock market, because every most company have like very long name. So every company name is actually abbreviated on the stock market, right? So their name is abbreviated on the stock market. So you could have, let's say, Amazon now abbreviated into AMZN, right? You could have Apple abbreviated, right? You could have Microsoft abbreviated. You could have Tesla abbreviated as TSL, right? Then you could have different companies abbreviated like that, and that abbreviation is called stock ticker. So when you're looking for a company on the stock market, the easiest way you can find them is via the stock ticker. And the reason is because there are some companies that have similar names, right? They have similar names, right? And when it comes to the abbreviation, which is the stock ticker, no two company on the stock market has the same stock ticker. So that means every company on the stock market has like a single stock ticker assigned to them, right? It's just like let's see it as matric number for students in universities, right? Because like in universities you could have a lot of people and three people can be bearing the same surname, even in the same department, right? So to make it easy for the university system to identify them, what the university would do is they would they will organize the naming system right in such a way that they will give everybody a matric number, and the matric number is like a system of the school identifying everybody in a unique way. So that way, no two students can have the same matric number. So that way, it makes it like easy for us to like find a student. If you want to search on this school database, you can search for just one matric number and it will bring that particular student you're looking for. The same thing in the stock market. In the stock market, um
The stock market. Okay.
All right. So in the stock market, you have stock tickers like that. And the reason why it makes it easy for us is you don't have to go type Amazon, so. You don't have to go type the long name of the company. Like this company now, the company is the first one is Amafeno Corporation, right? If you type that, there might be like two different companies in two different markets that bears the same name, right? So what you want to do is you want to just type their stock ticker. Once you know their stock ticker, it makes it easy for you to find, right? So sorry for the network ish, right? So I believe the Chaka platform should load now. Okay, let's have it. All right, let me see. Okay, let's have it. So now we are going into how you can actually buy stocks. So before you buy the stock, before you buy any stock you're buying, one thing you should know that is that there are different types of order. When you're buying a stock, there are different types of order that you can use to buy stock. And the order is more like how you can buy stock. Okay, let me explain this way. The order is just like, imagine you visit a restaurant, right? A restaurant that they allow people to eat in the restaurant, or they allow people to do takeaway, right? So if you're placing an order in the restaurant, they would ask you that, are you eating or are you taking away, right? And let's say it's even like you are placing an order from your phone now. The restaurant could ask you, do you want it to be delivered to you or do you want it to be delivered to another address, right? I mean, even right in the restaurant, there are three types of order you can place. You can say, I want like 5 spoons of rice with so and so. They would ask you, are you eating here, right? And or you want to take away. They will actually primarily that. Then you can say, no, the food is not for me. I'm just ordering for a friend. Maybe the friend is indisposed or something. Then they will use their dispatch rider to go deliver to your friend, right? The same thing when it comes to stock. There are different ways you can order for stock, and they affect the end result of whatever investment you're doing, right? So we'll go through them, but we'll go through them in a very easy and simple way. But primarily, these are the three orders that you can have in the stock market. So the first one is market order, the second one is limit order, and the third one is stop order. So it's quite simple, right? Let me just give us the explanation now. Okay, when it comes to generally buying stocks, most people just know about market order. Market order simply means maybe Tesla now is selling for $100 per share, and you want to buy Tesla stock. You know that you will pay $100 to buy Tesla. That means you want to buy Tesla at the current market price, right? That is market order. Market order means you are buying that stock at the current market price, while the limit order and the stop order means they are buying at a different price. But we'll see how we use them. So let me show you for the market order now. Okay. Okay, right. So for Chaka, their problem is pretty straightforward. We are using your PC. It's just like this, right? Hey, this is what I was talking about earlier when I was saying stock ticker. You see that these are companies, but they are represented by their stock ticker. So they don't have to write the full name of the company, just write ticker. So if you want to know more about this company, you can just type the stock ticker on Google and search to bring like everything, right? So let's see this. There should be buy button somewhere. Okay, yeah. Let's search for Amazon now. All right. MZ. Okay, I could just do Amazon straight. Right. So this is Amazon.com Incorporated. But when we look at it, the stock ticker will come as AMZN. So that's the stock ticker for Amazon. When you have the full name, you have the stock ticker in front of it. forget this chat, right? What we want to do is we want to buy, all right? So for this is what I was saying earlier about when you're picking brokers, you want to ensure that they have like more to offer to you, right? These guys have like more to offer on this their sell page, on this their page, right? When you click on the stock, on a stock, they'll give you informations about the stock. Although this information are not so comprehensive, but at least they are doing better than some other guys that will not even provide you anything, right? So this is where you, let's say you click on the stock, any platform that you are using, no matter the platform you are using, when you search for the stock and you see the stock, you click on it, it will bring you to a page, right, where you would have something like this. Most of them have something like this. Then you have a buy area like this where you can place your order. So primarily you would land on market order, no matter the platform you are using. Yeah. So market order, like I said, is the company is selling at a particular price and you want to buy at the price the company is selling, right? So currently this is showing us that this is the market price of Amazon. It's selling at $180. So what you want to do is if you want to buy Amazon now, you are, let's say you are buying one share of Amazon, it will cost you automatically, it will calculate for you, it's costing you 180. You are buying, let's say 4 shares, it will calculate for you, it's costing you 723, right? Now, let's say you don't have enough money to buy, but you still want to invest in Amazon. What can you do? You can use fractional shares that we discuss. That means you buy less than one. So you could buy 0.5 if you have the money. You could buy 0.5, right? So when you put 0.5, it's telling you that dollar. But let's say you don't even have up to $90 that you want to spend. Another thing you could do is you could just, for I think this works for Chaka. I don't know of other platform, but for Chaka, you could just type in the amount you want to spend on that particular stock. Let's say $10 now, and it will give you the amount of the shares that you get. So you get 0.055, right? So let's say whatever you're doing, let's say you are buying at market order now, you are buying at the current price. So that means you're buying Amazon share at the current market price. So we just, for market order, it's just straightforward. You put the quantity you want to buy, you click on buy, and you just go buy. The next thing is it will just ask you a couple of confirmation questions. Are you sure you want to place order? If you click on yes, you say, okay, your order is now being processed, your order has been placed, and all and all. That's market order, straightforward, right? Then when it now comes to the second type of order, which is limit order, that's where I will now use this slide to explain it to us, right? So limit order, let me increase it. So limit order is the kind of order that you place when you want to buy at a different price. Like I said before, limit order and stop order are the orders that when you use when you want to buy or sell at a different price compared to the current market price, right? So let me show us this in this place now. This price that Amazon share is to buy at that price. I feel like that price is expensive. I feel like it's going to drop, but I don't want to like be stuck to my screen or my phone. I mean, maybe I have a full-time job, right? I don't want to stuck to my phone, but I still want to buy at that lesser price. So what I will do is I'll use limit order. Right. So limit order is where I can do that. So let me explain it for us here first. The image is like comprising of limit and sell. So let's just focus on the limit side, right? So what the limit order does is it allows you to buy or sell a stock at a different price compared to the current market price. So let me explain when you want to use limit order to buy a stock now. So let's say at this point, Amazon stock is selling for, at this point here, can we see this cursor that I'm moving? All right. So at this point, 1 minute. Can you see my cursor? If you can see my cursor, please just give me a thumbs up. All right, great. So let's say at this point where the cursor is the current price of Amazon, which is $180. But you feel like you want to, Amazon is expensive at that point, and you want to buy at, let's say, 170 or 160, right? So what you do is you tell your broker that, hey broker, Amazon is selling at 180 per dollar per shares currently, but I want to buy one share of Amazon by the time the price drops to 170. So that's what this image represents. So this is the current market price. You tell the broker that you want to buy at this lower price, and they will do that for you. That's buy limit. That's limit order. When it drops to this point, you want to buy and you own Amazon stock at that price, then you don't care what happens again. The same thing when it comes to sell. So let's say you have a stock of Amazon now. You want to sell your stock of Amazon that you have, but you feel like it's selling for 180 currently. You feel like, no, I don't want to sell my stock at 180. I only want to sell my stock at 200. So you say, hey, broker, this Amazon stock is selling for $180 currently. But when the stock price gets to 200, I want to sell all my Amazon stocks. That's what they will do for you, right? So let's see how that like works practically on their platform, right? So this is it. When we come to this was limit order, it was straightforward. When it comes to limit order, pardon me, when it comes to limit order, they will show you these 4 columns. This current bid is telling you that this is the current price that the stock is selling, which is the same thing that we saw here, right? This will tell you that this is the current price. I think there's a little bit of difference. I think it's about 2 cents difference, right? That was 0.75. This one is 0.73. But let's say it's the same price. So this is the current market price of Amazon. So when I'm using limit order to buy Amazon stock, we are saying that even though Amazon is selling at 180, you personally believe that Amazon should be selling at 160. And by the time Amazon is selling at 160, that's when you want to buy Amazon. So you can't edit this because this is like a data that is coming from the market. You can't edit this, right? So what you do is you specify a limit price that you want to buy. This is specify price limit. So you tell them the price at which you want to buy. So I will type $160 here. So I'll type 160 here, and I'll tell them the number of shares I want to buy at that 160. Let's say I'm buying one share of Amazon. So it will tell me the amount I would spend, right? If it's 2 shares, it will tell me the amount I will spend, right? So then you click on buy. When you click on buy, this would not immediately buy the stock for you because the current price is 180. So the only time that it will get to buy this stock for you is when the price has dropped to 160. So the moment Amazon stock dropped to 160 on the general market, on the stock market, it would buy for you immediately at that point. So that way you can use this limit order to buy very, very cheap. And let me explain how you can use it to buy cheap. Normally we all know that the stock market is like let's compare it to the crypto. Price is always coming up, price is always going up and coming down, right? So imagine price is going up and price is coming down, and you want to be catching the price when it's as low, right? Because people are trading it on the short term. Stock market is always like going up and coming down. So you want to be buying when the price come down. So that's when you can use limit order for buying, right? So by the time the market drops to 160, you buy. So that means it gives you a way to buy at cheaper, right? You can always use that. Although you would have to wait till when the price drops to the amount you specify before your order is triggered. But it will be in the record of your broker. By the time your price gets to that, they will execute it for you and you are done. The same thing when it comes to, let's say it now comes to the sell side of the limit order now. For selling with limit order, what you are saying is, let me refresh. For when I'm using limit order to sell now, what you're saying is Amazon is trading at $180 per share now. But I feel like my share of Amazon is worth more than that. I want to sell my share when Amazon is trading at 200. So what you do is you specify your price limit You specify 200 as the price that you want. That's when you're using sell, right? Then you put the amount you want to sell. Let's say we still own 2 shares of Amazon, right? At that point, we'll get $400 back when we sell our stock instead of. So at this point, we'll be selling our stock at $200 per share instead of selling at the current price, which is 180. So it's just like saying you are selling your laptop, right? You're selling your laptop. We have 2 buyers. One buyer is saying, I want to buy your laptop at $180. The other buyer is saying, I want to buy your laptop at 200. Obviously, even if the second buyer that wants to buy it at 200 does not have the cash now, and he saying, don't worry, I'll have the cash by next week, Friday. If you don't really need the money urgently, you can decide to say, don't worry, I'll wait for the person that wants to buy it at $200, right? The same thing, right? When it comes to the buy side, you want to use limit order for buy, right? So you want, let's say you want this on this side, you want to buy a phone. One person is saying, I will sell this phone to you at $180. The other person is saying, I will sell this phone to you as $150. But the person that wants to sell it for $150 said, sorry, we are out of stock. You have to wait till next week, Friday, for us to get our stock from Lagos again before you can buy it. Obviously, if you don't need the phone urgently, you would have to wait till next week, Friday. You just keep your $150, wait till next week, Friday, and go buy it at $150. That's exactly how limit order works. So buying stocks is not like, it's straightforward, it's easy, but there's a little bit that you need to know more about it, right? Then let's go to the stop order now. The stop order. So for the stop order just works when, okay, this is how the stop order was. Let me explain. So the stop order also have like the buy part of it and the sell part of it. So the buy part of it is this is where the price is. Let's say the price is 180, but you feel like the price is going to get to, let's say, $300 per share. You've analyzed, you've done your research about what the company is doing. You feel like, oh, Amazon is launching one crazy AI product by, let's say, December. And I feel like by the time they launch that product, their stock price is going to like skyrocket. But you want to, obviously, you want to own their stock before it gets to that $300 because that's how you make money. So what you can use is you can use buy stop order, right? So buy stop simply means you're hoping that the price will continue, but you want a confirmation. And your confirmation is the price is trading at 180 currently. You are sure that if you get to $220 per share, it will keep on going up. It will not come down again. By the time you get to $220, it will not come down again. That's where you use buy stop. So this is 180. You tell your broker that by the time the stock crosses 220, the moment it crosses 220, buy 10 shares of Amazon for me, and I want to hold it till it gets to 300. That is what buy stop is. The same thing when you flip it, that's when you have the sell stop. You feel like the sell stop, you only use them when the market is crashing. Basically, when the market is crashing. Yeah. So let's say there is a market crash now. Let's say it's an industry crash. Every stock in the tech sector, right, is experiencing like a downturn, right? I feel like you can't take so much losses again. So what you want to do is you want to set a limit. You want to set a limit to how much you want to lose. So let's say the stock is trading at, let's say, 180 now. This point is trading at 180 per share now. You feel like I can't take so much pain. I can only withstand it till it gets to, let's say, $150. So you tell your broker that the stock is trading at $150, right? And I know the general market, maybe the general market is crashing now, but it's trading at 180. By the time the stock price gets to 150, the moment it crosses 150, please sell all my stock and give me my cash. That is what the sell stop looks like. And this is what it looks like when you're actually placing the instruction on the broker website. So they will tell you what the price looks like for the stop order. Then you will specify your own price. So let's say I want to use stop order now to buy. That means I'm using this image, this size, right? I want to use stop order to buy. You know, for buy limit, it has to come down. I want to buy at a cheaper price before it goes up. But this one, I don't want it to come. I just want to buy when it crosses a particular point. You see the difference. So what I would do is I would say it's trading at 180. By the time the share crosses $220, I want you to buy 10 shares of Amazon for me. That is what stop order look like when I'm using it to buy. So I'm sure that Amazon price will get to $300 per share by the time they launch that their big crazy AI. But I don't want to miss out of it. At the same time, I don't want to be too early. I don't want to jump in too early and maybe they don't launch their product and nothing actually happens, right? I want a confirmation. My confirmation is if the price crosses 220, it will definitely get to 300. So I just put it there. By the time the price crosses 220, buy 10 shares for me and you just place buy. Then when you now want to use for stop, for sell, like I said before, I'm using stop order for sell. At this point, it means the market is actually crashing, to be very sincere. So at this point, what you want to do is, just in case you need to use this, that's what I'm explaining. So you're saying the market is currently at 180, right? Can only take the pain to $150 per share. By the time it gets to 150, by the time it crosses $150 per share, sell all my 10 shares of Amazon stock. But when you're using it on the sell side, it will show sell, right? That's because I actually don't own any stock on this platform. That's why it's not showing sell here, right? So it will show you sell and you can press the instructions. So these two instructions are more like dynamic part of buying share, while this market order are the straightforward. Amazon is selling at 180 share and I want to buy 10 shares of it. I just buy for me at the current market price. That's what market order do. And that's what most people actually do when that's what most people do when it comes to buying stocks, right? And when you look at this, these two all types of order can actually save you and can actually help you make more money, like give you more margin of profit when you understand how to use them, right? Okay, great. Okay. Yeah. An example of when to use this limit buy order is, let's say you just discovered that Amazon CEO is stepping down. Obviously, it will probably affect their share at some point. That doesn't affect the value of the company, right? But the market would like shake a little bit. So that's what you can do. All right, you can just use it to buy by the time the price drop a little bit before it rebounds to the actual value. All right. Okay. 1 minute. Okay. All right. I think that is done. Right. Then okay, I think we already spoke about the fractional shares, right? Where you can, this is like a full share. This round circle is like a full share, but you can buy the smaller parts inside it. That's the concept of fractional share. And I think we showed it here where you can say, I want to spend $1 on Amazon. It's selling at 180, but I don't have $180. Sorry, I clicked on that. So it's selling at $180 per share, but you want to spend just $1 on Amazon. So you just type in $1, then it shows you how much of Amazon shares that you own. Or you could even type in your 0.000 and it tell you how much that will cost them, and starts to adjust the figure to, let's say, 0 again, then it tells you how much you spend. So that's basically how you can go around that. Then yeah, to wrap it up, 5 things you should do before you actually invest in stocks, right? For everybody that's following this series, these are like 5 things that I think we should do before we actually put our money into stocks, right? The first thing is you need to have a cushion of money, right? A cushion of money simply means you need to have an emergency fund. That's like the best way to give it to you, right? An emergency fund simply means that money that you would run to or go to when you have like the slightest emergency. So imagine like you're a developer or you're a tech person now, and your system decides to crash now, but you have like 1 million or 2 million in stock. That money that you can run to instead of selling all your stock portfolio, that's the emergency fund. And before you start investing in stock, you need to have that kind of money. But I feel like we are at a very early stage of our life, right? And we can like take risk. So I feel like for me, I feel like you could be doing like the two simultaneously. You could be investing in your stock portfolio and also be building your emergency fund at the same time. So let's say you're saving 100K per month, or saving 200K per month. So you could say half of it will go to, let's say, your investment side, different investment, not necessarily stock alone. And this applies to investing generally as an individual. 50% of your saving might go to your investment, then 50% should go to your emergency fund. And by the way, your emergency fund should be in an account that is not like your primary account, an account that is accessible, but not like your primary account that you can easily just touch. And emergency fund is not for when, let's say, you go out on a hangout date with friends and family and you guys overspend, right? And you need to cover the bill. Emergency fund is not for that. I feel like it will be better for you to wash plates and they will drop your video on TikTok or Instagram than for you to touch your emergency funds. Like that's serious, right? Okay. Then the next thing you need to do before you invest in stock is you need to reduce your debt. Just in case you have debt, anybody can have debt. It's a good thing. It's only bad when you have debt that you spend on liabilities, right? Just in case you have debt, you should reduce it before you start investing into any asset, right? Because it makes it easy for you, especially like let's say credit card debt or debt that have like high interest, like all these fintech apps. Reduce it before you actually start investing. Then the next thing you need to do is you need to make sure that your job is as secure as it should be, right? Stock investing is like a long-term investing stuff, not like something that will feed you primarily. So that means you have to like ensure that your source of income, you have a source of income primarily, you have a source of income, and you keep on working on getting your source of income better, right? Increasing your income because the rate at which you increase your income would reflect how fast you can actually build your investments, not only stock, like any investment that you have. Then the fourth thing is you want to get adequate insurance, right? Like I said, emergency fund is good for you, right? You need to have emergency fund before you even invest in anything. Like I said, I feel like you should do this simultaneously. But beyond the emergency fund, you should have insurance, right? So let's say I feel like money is like a tool that can provide like different layers of security for you, to be very sincere. Forget the whole money is evil mentality that Nigerian or African have growing up. Money is like a device that can provide like different level of insurance and security for you. So beyond having emergency fund, another thing you could do is you could have different insurance, like health insurance. Health insurance as simple as national health insurance scheme, right? I think it costs about let's say 12,000 to 24,000 per year. And the benefit of that is if you need to use the hospital, right, you get to spend 10% of whatever amount your bill is. So if your bill was 100K, you pay them 10K. If your bill was 10K, you pay them 1,000. I feel like that's cool because it's better for you to spend 24,000 naira now and cover the entire year than when you, let's say you have a serious like health condition or a slight health condition, you have to now go touch your emergency fund. You see how understanding your personal finance and how to manage your money can just the knowledge that you have can help you use your money to create a different layer of protection for yourself. I mean, some people might have so much money and not have health insurance. So when a slight health issue comes up, maybe let's say diarrhea or typhoid or malaria, you go to a private hospital and they bill you 100K or 150K because you slept over and they charge you for bed and other services, right? So understanding how to manage your money would give you like multiple layers rather than just handling your money like a zombie. All right, great. Then the next thing is you should also understand how stock works, right? Before you invest in stock, you should understand how it works, which is what you're already doing. And you should keep doing that. And you should also understand how it can help you achieve your goal because investing in stocks is not just like something you're doing because I'm saying you should invest in it or because the general public saying you should invest, right? Stock investing or any other that investment should be towards a goal, right? You should be investing towards school fees for let's say masters, you could be investing towards buying a home, you could be investing towards anything. So your stock investment should tie towards a particular goal that you are heading towards, right? So great. Those are the 5 things you need to do before you invest in stock, right? Then the next thing you need to do is, the next thing is 3 things that you shouldn't do when you are investing in stock. 3 things that you should completely stay away from when you're investing in stock. Most people will not say this in public. Most people will not tell you. Brokers will not put this on their Instagram page because their job is just to provide the access to the market. But when you're investing in stock, what you should not do is, number one, you should not put all your money in one particular stock. Don't ever do that, right? Then the reason why I will not explain this further is because I want to explain number 2 with it. Then okay, everything is actually the same thing, right? So I would read it out and I'll explain everything together. 1, don't put all your money in one stock. 2, don't put all your money in one industry. Then 3, don't put all your money in one asset. So what this is basically saying is just saying diversification in different ways, right? By saying don't put all your money in one stock, it simply means you're investing $1,000 in stocks. Don't go put all your $1,000 into Amazon or Facebook or Tesla, right? Because what happens tomorrow when Elon Musk decides to do one big fuck up and the Tesla share like starts plummeting? All your money is going down at the same time, right? So it's like you're taking like super crazy risk when you put all your money into one single stock, because any small thing, your portfolio would react crazily. Then the next thing is, don't put all your money in one industry. When it comes to stocks, right, there are different industry you can invest into, right? So like we have the same different industry in the major economy, right? There's health, there's tech, there's pharmaceutical, there's insurance, there's banking, there's finance, different one, right? So when investing in stock, don't go put stocks into just one industry. If you have only Amazon, Facebook, Microsoft, Apple, let's say Tesla, right, in your portfolio alone, to some you are just basically in the tech industry. All your stock money is in tech. If something happened to the tech industry generally, your portfolio would show red on a big scale, right? But you should consider different industry, maybe pharmaceutical, maybe agriculture, health, maybe real estate, or right. What that does for you is it reduces the risk that you're exposed to when you're investing in stocks, right? Then also when you're investing generally, don't put all your money in one asset. Don't put all your money in stocks alone. Put your money in some other asset like real estate, maybe commodity like gold, right? You can buy it as a jewelry. You can buy it in different forms, right? You can buy real estate, put your money in different things, right? What that does for you is it reduces the risk you are exposed to. So let's say you put your money in stocks alone. What happens when the entire stock market globally is down? That means you're exposed to your entire net worth is exposed to risk. The risk that come with uh stock market, right? But what if you have part of your money in stock, part of your money in real estate, part of your money in commodity like gold, right? And you also have part of your money in different things, right? So even if the stock market is experiencing a temporary downturn, it doesn't affect your general investment portfolio. It's just your stock portfolio that is experiencing at time. If something is happening to the real estate market, right, it does not affect your general portfolio. It's only your real estate portfolio that is affecting, right? Something that affecting the price of let's say gold globally. So let's say 1 gram of gold is selling for around 70, 80K now, and the price is dropping to around, let's say, 60K, right? That downturn would not affect your entire net worth or your entire portfolio, right? It only affect that gold portfolio alone. So it's basically just saying you should prioritize diversification when you're investing generally and also when you're investing in stocks, right? All right, great. I do hope we'll all get this. Right. So if you do have any question, please, this will be like the good time to take questions. Right. If you have questions or please go ahead. You've raised your hand. Please unmute yourself and you can ask the question.
Good evening, Chris.
Hi, good evening.
And thank you so much for your time. I really appreciate it and for the enlightenment.
You're welcome.
So my question is, based on the buy limit order that you talked about, like the example you
Yeah.
gave, like if like the shares price is like $160. So my question is,
Mhm.
there are times that if it fall below $160, can the way you said, can it buy it automatically? Do you get what I mean by my question?
Yeah. So the whole goal is if you're using uh stop order or you are using limit order, whatever instruction that you set there is going to be automatic. It's not waiting for you to confirm later. So the only thing is the moment you are setting that instruction, it will ask you some confirmation question. Do you know that you are setting so and so? Do you and this? So once you tap yes for those questions that is asking you at that point, every other thing is like set on stone. Unless you cancel the order, there are always options of canceling order, right? Once you set that order, you can go back to pending orders and cancel it. Just like you're in a restaurant, let's say if it's a restaurant that is like okay, let's say it's a restaurant that is not like a la carte now, a restaurant where the food is already cooked down, right? You just go there, you order for 1 spoon of rice, 3 spoon of rice. You could say, don't worry, just make it 1 spoon, then I'll take spag, right? That's possible. The same thing with that, you can cancel the order. But if you don't cancel the order, it's going to be completely automatic. Even if you are not with your phone, even if you are not online, if your data is not on, everything is going to happen and you just wake up tomorrow and it's done. I don't know if that answers your question perfectly.
Yes, it does. But one of the things I just want to confirm is that like you said, my concern is that although it will do like it will be automatic, like you said, but my concern is that if you set the buy limit order of 160 and it
Yeah.
went below 160, will it still automatically go ahead below 160?
Oh, okay. Below 160. All right. Okay. Give me a minute. Let me switch to. Right, can you hear me now?
I can hear you.
Can you hear me? All right, great. Sorry, I switched to my mobile device. I was having back pain. All right. So, when it drops to, let's say you set a limit order to buy at 160, and the price magically drops to, let's say, 150, 140, right? What it will do for you is it will buy for you at the this is tricky. Let me see the best way to put it to you. It will buy for you at the closest price to 160. Hold on. Hold my cup. Let me explain. So the way it works is you're setting a limit order to 160 that it should buy for you at 160, right? If the drop in price is a rapid drop to 140, it dropped like very fast, rapid drop to 140, it could buy for you up to 140. But let's say the drops to 150, or it drops to let's say 160 now, and it takes a whole day before it drops to 140. There's higher chance that it will buy for you at 160. The reason why is this: the brokers have like a series of orders on their hand, right? So they will try to buy for you at the closest price to 160 that you set, right? The same thing applies to when you're using market order. You're just buying at the current market price. So let's say the current market price is 180, right? That means you want to buy at 180. But let's say by the time the brokers want to fulfill your order now, the price has shifted a little bit. Maybe yesterday the price was 180, but you place your order. Obviously, the broker can't buy overnight. So by the time they want to buy now, by the time they want to buy now, it's not like let's say 181. They will buy to you for you at the closest price to that 180, the closest price to which they can fulfill that order. That's when they will buy for you. So this same thing applies to when you're using that limit order. So you're using limit order and you said 160. With a rapid drop to 140, if 140 is like the first price that they can catch, they'll buy for you at 140. But let's say 160 or 159 is like the first price that they can catch in the market, they'll buy for you at 159. Does that answer your question perfectly?
Yes, it did. Thank you so much. I really appreciate it.
All right.
Okay, so do you have any other person that has questions?
Yes, I do have a question. Thank you
All right,
very
please
much
go ahead.
for the session. So I just wanted to follow up on, in terms of like, books or any resource to really like, deepen one's knowledge about, stocks and even, finance and, all these tricks and strategies, which books or, this thing would you recommend? Or which one do you do,
Okay,
or do you listen or read? You know?
okay. So there are some that you will find in books, right? Like this market order, stock orders, because I learned a little bit about forex trading before, so I know that applies directly into stocks because it's possible. When it comes to any financial market that they trade, it applies, right? So that's how I'm able to check some people that talk on stock investing on Instagram. They think when they teach you do not teach you this because most people don't know that it's actually applicable. But let's say for my journey, I don't know where you are, the current state that you are in personally, right? But let me make it like a very general recommendation that would fit to any scenario that you are in based on my journey so far, right? So I would say you can go for you are just starting, you could should the first book you should read on personal finance should be Richest Man in Babylon. Read it in this order. If you're just starting. So I'll go like continually that way. Read Richest Man in Babylon first, right? Then read Rich Dad Poor Dad, right? Then if you're the kind of person that you want to explore entrepreneurship a little bit and you like passively are like active on making the big money, right? Read why read uh what's that title again?
Why B
Why
students
why
see, I
B
mean, why C
students work
students work for
yeah.
B students and B student for A students?
Okay, yeah, thank you very much for that. I couldn't get the placement of the word, but that book is written by Robert Kiyosaki. Also by also Rich Dad Poor Dad is written by Robert Kiyosaki. But we are not like on the very, very active side of we want to make like crazy bucks. Just keep that third one. Then you could go for after that you could go for let's say you're the kind of person that works 9 to 5, you should maybe go for side hustle. That's free side hustle. Then after you should go for which one? You should go for sorry, trying to think around it. I had a couple. Trying to see which one would fit perfect. Okay, I think after that you should when you want to consider investing, I think those first two, right, would set a very good foundation for you to understand personal finance, right? You said you're on a very good track. Then when it comes to once you understand that, you would naturally gravitate towards investing. By the time you start investing, read Rich Dad's Guide to Investing by Robert Kiyosaki. Then you can check some other books on investing by Robert Kiyosaki. Then when it comes to stocks particularly, right, you should check stock investing for dummies. I think I've shared it on the WhatsApp group, right? So you should check stock investing for dummies. That's like I feel like that's like the only book that you basically need on stock investing. The remaining books everywhere, physical, online, they're just like noise. Right? Just if you start stock investing for dummies from the first page to the last page, I think you have 90% of everything that you need on stock investing. You will not even need to listen to them. Maybe when you just come around, you just and that we just discuss, right? For stock investing. Now, when it comes to real estate, mm, it depends on how you want to do real estate. If you're doing real estate for if you're doing real estate for real estate business, maybe you could consider some books of about exactly real estate. But if you want to know about real estate generally, right? You want to have like a broad knowledge, just go for what every real estate investor needs to know about cash flow. But at the end of the day, the investing in real estate is not because you want to live inside the house, you want to make money. Right? I think you should read that in those compare real estate. Then honestly, I can't remember any other one that I feel like we should read, but I can always check my library whenever I'm if I was at home now, it should have been very easy. I'll just look through the entire book and pick one that will resonate. I can't even remember the title, but I feel like that should do for now. Does that answer your question perfectly?
Yes, it does. Thank you. But I didn't get the name of the one on side also.
Side hustle. It's still side hustle by just type side hustle on Google. You see, then I think someone recommended one also. Psychology of Money. Right. Very good, super amazing book. I read that, but I don't remember mentioning it to you
Okay.
because
Okay.
I don't know why. Right. Then I think there's one other book that you should read. Although I would advise it for beginners, right? I'll advise it for people that already have like reading culture and they can read like for a month kind of straight, right? It it's the title is Money Master the Game. Right? Just search Money Master the Game in Google. It's a breakout today. I can't remember the author, but it's like all these book that are like big. They look big from outside. Those kind of books. Yeah. All right, great.
Okay.
So, do you have any other question? Alright. Do we have any other question? Okay, Dalako is raising his hand. Please go ahead.
So it's not more of a question, it's a comment and it's a feedback on you, right? Again, this is me public